Every recession feels obvious only after it begins. In 2008, most Americans didn't see it coming. In 2020, the shock was sudden. And now what people are asking again. Is the United States heading for another recession in 2026? Gas prices feel unstable. Rent is crushing families. Debt is at record levels. Yet the headlines say the economy is strong. So what's the truth? Tonight, we're not here for fear. We're here for facts, patterns, and reality. By the end of this video, you'll understand what a recession really is, the warning signs most Americans ignore, and whether 2026 could be the breaking point. Stay till the end, because this affects your job, your savings, and your future. What is a recession? A recession is not a stock market crash. It's not just inflation. A recession happens when people spend less, businesses earn less, jobs disappear, debt becomes unbearable. Technically, it's 2 consecutive quarters of negative economic growth. But for regular Americans, it feels like paychecks don't stretch, credit cards replace savings, side hustles become survival. Recessions don't start suddenly. They build silently. And that's what makes 2026 one examining. A look at past recessions. Let's look at history. 2000.com bubble. People believed tech stocks could only go up. 2008 housing collapse. Banks gave loans people couldn't repay. 2020 pandemic shock. The world shut down overnight. Different causes, same result. And here's the pattern. Every recession was preceded by excessive debt, asset bubbles, overconfidence, ignored warnings. Sound familiar? America's debt problem. This is the biggest red flag. Consumer debt is exploding. Credit cards, auto loans, student loans, buy now, pay later. Most Americans are not overspending for luxury. They're borrowing for basic survival. Rent, groceries, medical bills. When people rely on debt to live, the economy becomes fragile. One shock and everything cracks. Interest rates and the Fed. Interest rates are like gravity. Low rates encourage borrowing, boost spending. High rates slow everything down. The Federal Reserve raised rates to fight inflation. That helped prices stabilize but created new problems. Higher rates mean more expensive mortgages, higher credit card interest, business slowdown. Recessions often begin 12-24 months after major rate hikes. That timeline points directly at 2026. Housing market warning signs. Housing is the backbone of the U.S. economy. Today, home prices are still high. Mortgage rates are expensive. First-time buyers are locked out. When people can't afford homes, construction slows, jobs disappear, spending drops. We're already seeing fewer home sales, rising rental pressure, investor-owned housing dominance. Housing doesn't crash loudly. It freezes quietly. The consumer is weakening. The U.S. economy runs on consumer spending. But now, savings are shrinking. Credit usage is rising. Confidence is falling. Americans are cutting back on travel, entertainment, big purchases. When the consumer slows, a recession is never far behind. Job market strong or fragile? Unemployment looks low on paper. But reality says, more part-time jobs, more gig work, fewer stable careers. Layoffs often begin quietly. Tech first, then finance, then retail. Job losses are usually the final confirmation, not the beginning. So is a 2026 recession guaranteed? No recession is guaranteed. But risk is clearly rising. The U.S. economy in 2026 depends on interest rate decisions, consumer debt tolerance, global stability. The system isn't collapsing, but it is stretched thin, and stretched systems break easily. How Americans can prepare. This is not fear. This is responsibility. Smart steps. Reduce high-interest debt. Build emergency savings. Avoid lifestyle inflation. Strengthen skills. Recessions punish the unprepared and reward the disciplined. The question isn't, will a recession happen? The real question is, are you ready if it does? America has survived recessions before, but individuals survive them differently. Stay informed. Stay realistic. Stay prepared. Because the economy doesn't care about hope. It responds to numbers.